Shares of cloud security company Datadog are down hard this morning, down about 11% after the company reported its first quarter results. On the surface, the numbers were great. Beat on revenue, beat on earnings per share, great free cash flows, but there was clearly something the market didn't like. I'm Jason Hall. This is Investing Unscripted. We're going to take a closer look at Datadog's results, talk about why the stock is falling, and what investors should make about it going forward. Before we get into the details, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, please go to our special link. It's fool.com/unscripted. Go to that link and The Motley Fool is going to give you for free its 10 best stocks to buy right now. You're going to want to check that out. Again, it's fool.com/unscripted. Okay, let's get to it. Datadog stock is down almost 11%. We're recording this. It's a little bit before 10 a.m. So the market's had time to digest management's call with analysts. Basically, the market has all of the information out there to act on. Let's pull up the result, talk about what the company reported. We'll talk about the good and the bad. Revenue was up 27% year over year. Now, that was strong. That was well within management's expectations. Also better than Wall Street analysts. Consensus Wall Street analysts were looking for about $590 million in revenue. The company earned about $611 million. So that was about a $20 million beat in revenue, which is really good. Non-GAAP earnings per share came in at 44 cents. The consensus was around 34 cents. So they beat the consensus. That was also a big growth from the year before quarter. GAAP net income too. Here's the thing. A year ago, GAAP losses. They'd had a couple of quarters in the past where they reported positive GAAP net income, but now they're 2 quarters in a row with GAAP profitability. That's a really big positive. Also, strong cash flows. We'll talk more about that in a minute. But I want to talk briefly about the thing that sent the stock down so much. And it's typically the case when we see strong earnings and we see a beat on the top and the bottom line, and then the stock sells off. It's a case of sell the news, where there was something about what the company's saying going forward that's setting the stage for the stock to fall. Because you have to remember, the market's looking forward. Past results are great, right? It's great when you beat expectations. But the reality is investors want to know, what are you going to do for me next, right? When you're investing in a company, it's all about the long-term potential for the company to generate business, maybe just next quarter or next year. A lot of these analysts are really focused on the short-term results. So let's take a look at the company's guidance and talk about where this is a disconnect. And this is the thing that is sending the stock down today. So we're going to look at the second quarter and full year outlook. Revenue growth, they're saying between $620 and $624 million. Non-GAAP operating income between $138 million. Let's start right there. So what does that mean? 620 and 624 million. At the midpoint of this guidance, that's 22% revenue growth. We just saw 27% revenue growth in the first quarter. We saw 27% revenue growth for all of 2023. So now you're saying growth is starting to slow even more. 27% revenue growth last year. We were 30% plus in 2022. 2021 was even better. We're seeing continued slowing of revenue growth. Now, operating income too, this non-GAAP number right here, 134 to 138 million. Let's compare that to what we just saw. Non-GAAP operating income, $164 million in the first quarter. So you're saying that operating income is actually going to fall in the second quarter from the first quarter. There's some timing things there with certain things that they take expenses for that's playing a role in that. This is also still big growth from last year. But again, the market's seeing that and saying, well, we don't love that. Now, take a look at the full year growth, $2.6 billion in revenue at the midpoint of guidance. And that's 22% revenue growth. Again, coming off 2023, when revenue was up 27%. So you're saying for the full year, we're going to go from 30 plus in 2022, 27% revenue growth in 2023, 22% revenue growth in 2024. We're going to value everything down. So that's kind of the bottom line here, guys, is revenue growth is slowing. And management's saying we expect that that's going to continue for the full year. And needless to say, investors aren't loving hearing that today, voting the stock down. Now, I want to put some context around this, because the reality is this is actually kind of par for the course for Datadog if you look at its stock and what happens after the company reports earnings. This over the past 3 years, going back in 2021, earnings pop. Now, earnings pop right here. What do we have a lot of? Earnings drop here. Little pop, but then the sell off after that, right? Now, if you look at just going back to the beginning of 2023, so the past 18 months, the past 6 quarters that the company has reported, we had 6 quarters and we've got 2 pops, 2 times After the earnings were reported, the stock skyrocketed. And we've got one, two, three, four times that the stock fell after earnings. Now, since the beginning of 2023, even with 4 out of 6 earnings reports, the stock has fallen. The stock is up 52%. Now, let's be fair. A lot of that is a lot of tech stocks, a lot of these cloud stocks were down a ton at the beginning of 2023, right? We saw that huge sell off, more than a year long bear market where a lot of tech stocks and these cloud stocks really sold off. So a lot of it is just the market kind of coming back to the story behind these businesses. But I think the point is that there is a bigger story that's important to remember too as investors. And that's that over the long term. And again, 18 months is still short term as far as I'm concerned, but we've got 6 earnings reports, data about the financial results of the business, about the story and the trajectory. And even with the disappointment around earnings of usually guidance, right, sending the stock down, the longer term story is the market's focused back on the growth story and the fact it's not just revenue growth, but thinking about the earnings growth of the company. Revenue growth is declining, but if you look at the bottom line results, we went from a GAAP loss a year ago quarter to a GAAP profitable quarter this quarter on a non-GAAP basis, like a 90% increase in non-GAAP earnings per share. Look at cash flows. We saw cash flows go up. Operating cash flows were up about 60% year over year. I think free cash flow, I don't have it right in front of me, but I think it was closer to 90% increase in free cash flow in the first quarter of this year versus the first quarter in 2023. So what we're seeing is the part of the longer term story about so many of these companies. Datadog is demonstrating that it's true. You have this very high margin business. Gross margins increased from 79% a year ago to 82% in the quarter. And what that means with these businesses, because you get massive scalability and operating leverage, their fixed costs don't scale up as quickly as revenue grow. So that means that margins, those high margins, more of that margin they maintain in their net margin, 31% free cash flow margin in the quarter. Just a super duper strong business. You look at where they're growing, 15% increase in customers that spend at least $100,000 a year in annualized recurring revenue. So that's contracted long-term recurring revenue, 15% increase in customers spending that six-figure amount. Those are really, really profitable customers. So what we're seeing is even though growth is starting to slow on the top line, the bottom line results continue to look really, really appealing. Okay, so we've kind of unpacked everything a little bit. We've taken a closer look at the business, talked about the results, talked about the fact that I get it with the market kind of revaluing a little bit, bringing the stock price down, because the reality is that if revenue growth does slow, how much more is it going to slow next year and the year after that? You think about valuations over the long term. It's really important to kind of be mindful of slowing revenue growth and the impact that it will have on the bottom line results over time. Let's think about looking long term. Is this an opportunity to buy Datadog, add it to your portfolio, maybe increase your position if you have one? Here's how I think about it. Over the long term, since the beginning of 2022, that's when Datadog started to generate positive free cash flow. So we can start using free cash flow as a valuation metric. Since then, it's traded for about an average of 80 times, a little over 80 times free cash flow. That's very expensive. I'm not going to deny that that's not very, very expensive. Looking at the company going forward for 2024, based on what management is telling us, so we earned 31% free cash flow margins in the first quarter. They say they're going to do about $2.6 billion in revenue. Okay. So that's about $800 million in free cash flow the company says they're going to generate in 2024. All right. So we use that as a baseline. Based on the stock sell-off today, the stock trades for about 48 times my estimates for free cash flow in 2024. Again, that's not cheap. Cheap would be like 15 or 20 times free cash flow. That would be super cheap. But I do think based on the strength of Datadog's business, more and more companies keep moving to the cloud. Cloud software, cloud applications are super important. What's also super important? Security, keeping the data that's there secure. Datadog is a leader in observability and security for cloud applications. More and more companies are going to continue to come to Datadog. They're going to increase their spend over time. I think we're going to see those margins continue to hold, maybe even increase more over time. And free cash flow margins a year from now might even be higher than that 31% we saw in the first quarter as it continues to get great operating leverage as its scale grows larger and larger. Put all that together, and I think that 48 times free cash flow is a really appealing price to me for Datadog. I'm not saying this is a time to back up the truck. I have a position in Datadog, but I think it's time for me to increase that position a little bit. I'm going to be adding a little bit more to my portfolio. I think investors that are looking for great long-term growth may want to be doing the same thing and looking at Datadog as a stock to add to your portfolio or maybe to increase position if you've already started one.